Welcome to the Leaders Edge podcast. I'm Sandy Laycox, editor-in-chief of Leaders Edge. In this podcast, sponsored by AXIS, I talk with Jay Hamilton, Global Head of Accident and Health Insurance at AXIS. We discuss the eclectic mix of product lines in accident and health, current lines of interest such as pet insurance, esports, and benefits for first responders. We talk market headwinds and the 2024 outlook. Give it a listen. Jay, it is a pleasure to have you here with me. Welcome.
Thank you, Sandy. It's a pleasure being here and looking forward to talking a little bit about the accident and health marketplace.
Yes. Well, let's get right into it. If you could maybe give us a quick overview of where you see the market currently.
Yeah, I mean, as you know, the A&H marketplace, it's fairly diverse and dynamic. At the same time, we face a lot of headwinds within A&H, right? So you got the economy, whether that be inflation or recession. You have unfortunately, the global conflicts, and then also the economic and political pressures impacting, in particular, our U.S. portfolio, but some impact on our international portfolio as well. You know, if you look at some themes within the A&H marketplace, again, it's fairly diverse and eclectic. But the one thing to note is A&H is not a single line of business, right? And it's made up of numerous items, whether that be student accident, travel insurance, corporate accident, supplemental health, in some cases for some carriers, pet insurance, dogs and cats. So again, a diverse and eclectic portfolio. And because it's so diverse, a lot of that really is driving other carriers to get into the portfolio, not necessarily, or get into the market, not necessarily across all products, but you have numerous P&C companies trying to enter the A&H marketplace in the U.S., leading with what I would call specialty or supplemental health products. In the marketplace, also, we talk about a soft and a hard market, and obviously a hard market on the P&C front. But A&H does see some seasonality with respect to rates, a lot of it driven around inflation and medical trend. And thus some product lines we've got to look for significant rate, while others, more accident driven, require little to no rate at renewal, owner-based rates for new business.
You've definitely mentioned that it's eclectic and it covers a lot of ground. And we're going to get into some of those headwinds and macroeconomic factors that you just mentioned. But before we do, can we hear a little bit about some of these more eclectic lines and what really is going into this book of business?
Yeah, you know, I can speak for AXIS A&H as far as the eclectic lines of business and the different niches that we provide coverage for. So on our end, we're really divided into 4 business units. You've got AXIS Group Benefits. We've got the pet insurance, as I mentioned earlier. We've got a specialty A&H North American operation that I'll get into, and then our international operation out of London, right? So if we look at group benefits, for us historically, we've covered part-time seasonal employees with low price point limited benefits, whether indemnity-based limited benefits. And of late, we've really pivoted to more of the mainstream voluntary supplemental health product sets, corporate accident, really trying to address some of the needs of employers and associations. You know, some other examples include we've launched a gap product, critical illness on hospital indemnity, all of which trying to help maintain the cost of health insurance for both the employers and employees alike. Our newest line, pet insurance, right? We launched that in 2022. That marketplace is interesting because it's fairly new to the U.S. It's approaching a $3 billion marketplace, where organic growth alone is well into the double digits. For pets, it covers your typical illnesses, but accidents, there's wellness coverage, and other things that you would typically find in U.S. healthcare for humans versus pets, right? And then on the specialty side, you know, we cover travel at unique risks, including students and sports. We also have product participant accident coverage. We cover a big chunk of first responders, line of duty in the U.S. We're one of the top three carriers there. And then again, leisure travel, and we do a little bit of guild and entertainment business on the West Coast. The last piece for us is our international operation out of London, where we write either on Lloyd's paper or we have an Irish entity as well. That operation focuses a lot on participant or personal accident, but we also write professional sports, general marine and aviation. So think we're covering pilot and crew and the staff on a vessel. We do travel and some medical niche in there. I think the common thread across our portfolio is that all the lines have really strong potential for growth, working with key partners both here and outside the U.S. We continue to expand our geographical footprint. And again, it's an evolving market, so we pivot and change our insurance offerings as well as services. Services has become a significant portion of the portfolio where we can package again insurance and non-insurance products to the end consumer or the employer.
You mentioned a lot of interesting and changing business lines there that I'd love to hear a little bit more about, certain ones, first responders, youth sports. It's really a wide range. And you mentioned that it's always evolving and you're always trying to change. Are there any lines in particular that are standing out to you currently where you're seeing trends that you haven't seen before, or things that brokers should be thinking about as they talk to their clients in these areas?
Yeah, I think a couple. You mentioned first responders. So a lot of things have come out post 9/11 with the research and data that we've gathered. And at the state or the federal level, there is a push to provide cancer coverage to first responders. As you would imagine, we focus on the voluntary first responders, and as you can imagine, a lot of the smaller communities and firehouses cannot necessarily afford to pay for and provide the cancer coverage. So there's a lot of federal funding and as well as state funding that go toward providing coverage. So we write a couple of state programs. So that's one big trend, is not only accidental death, accident medical, and disability insurance for first responders, but now there is critical illness or cancer cover on that front. As far as other lines of business, I think mental health, right? So the awareness of mental health has become a bigger benefit or a focus of employee benefits producers and employers. So whether it be an EAP and other services, we definitely are in tune with that and provide those services. Again, services, not only the insurance coverage to pay for the different coverages, but also then the services to bring telemedicine and other items to the table. Another thing to note is that we implemented a first responder assistance plan. We call it FRAP, right? So one of the first ones to the market. Obviously, you can imagine a first responder responding to a traumatic incident. In fact, the tagline for our partners is, don't suffer in silence. So that's a big push for us on that front. And then I think further on the employee benefits is, the ability to recruit and retain staff. Is a bigger and bigger issue. We see that all the time, whether you go into a restaurant, right, and all of a sudden there's half a dozen tables that are empty. It's because they don't have the wait staff to do that, or the kitchen staff to run at full capacity. So providing supplemental health, limited benefits to help recruit and retain employees, I think, is one of the key things going forward. And at a price point that, quite frankly, is affordable. You've got a lot of individuals out there that can't afford major medical. So we provide solutions to ease the burden on that. And again, not only to the employee, but also to the employer.
Are you seeing in that space, and you had mentioned earlier working with seasonal workers and as the gig universe grows, are you seeing more and more need for, sort of regular benefits for those types of workers who are working more on an hourly basis, or, not having full-time status?
Yeah, it's interesting. We're almost pivoting back to where we started. So We acquired a company back in 2014 that really started out with limited benefits, and they really priced their product that it cost 1 hour's worth of wages a week. So a low price point, but covered enough of the accident coverages to provide a baseline, right? So I think what you're seeing now is a little bit back in that direction, that people are really cognizant of the cost of major medical, right? So on the employer side, they're increasing the deductibles and to meet certain ACA requirements, but that increases the price point. Well, trends are increasing the price point for the employee. And so if they're coming to carriers like Access Capital to provide a gap product, right, to buy that deductible down, in the end, a lower price point. And so as you do that, both for full-time and now part-time, because you are seeing a shift with employers that are offering a very similar, if not equal, benefits package to part-time employees, as it has historically, as you know, that's really been only offered to full-time employees.
Yeah, definitely changing trends there. Let's go into some of these larger factors that you touched on briefly earlier, the macroeconomic factors that are driving a lot of decisions that are made by employers. What are you seeing in terms of the trends that are affecting these types of benefits decisions?
Yeah, I think some of the things we've talked about, if you take inflation, for example, right? So again, consumer inflation, medical inflation, driving the cost of healthcare up, and employers are looking for alternative solutions for their employees to ease the burden of healthcare, again, to help retain employees or to recruit employees. In our space, because we operate in supplemental health, we're able to, for lack of a better term, we're able to move levers within the portfolio to change the price points of a product. Again, higher or lower deductibles, higher or lower benefits, elimination periods. So that gives us a little uniqueness because we play out of the ACA, the Affordable Care Act kind of space. So we can do that. I think recessionary periods also create a level or a period of uncertainty for employers. So they're also looking at, what benefits can I afford to provide the employees? Do I need to increase the deductible to help reduce my costs and shift some to the employees? So I think you have a lot of cost shifting going on, but I also think employers are cognizant of the burden that places with the employee. And again, back to my comments on retention, you push too much of the burden of healthcare on the employee, and quite frankly, it becomes the catalyst to seek employment elsewhere, right? And so it's a balance.
Yes, that's the number one thing we see, right? Talent is the issue everyone talks about.
Yeah, I think some other things that we're seeing, I think you're seeing trends in technology. So, a couple of different things on that. Ease of interaction. So more and more things are being pushed to, quite frankly, to your phone, to your apps. Whether that be looking up discount RX or scheduling appointments or filing claims. I think more and more technology is moving in that direction. And quite frankly, that's one of the things as we look to partners both here in the US and in Europe and London. On the distribution side, we definitely gauge their level of technology, but also on the claim side, right? So you always want to improve your claim service, reduce any friction in the process. So we're also partnering with individuals who either have or are implementing a high degree of technology into the claims process. One of the other things I think a trend is providing the part-time employees with a level of benefits that historically they have not received, creating kind of equity in the benefits front between full-time and part-time employees, and then a deeper focus on mental health, right? So whether that be mental health service providers on our traditional employee benefits portfolio, or first responders, or in fact in our student portfolio as well. So I think those are the majority of the trends we're seeing. Obviously, it's a very dynamic marketplace, but also the changing world and everything going on. We have to bob and weave around products and services we provide, even on the travel insurance side, where travel assistance, so medical evac and things of that nature become that much more important.
Yeah, that's a great point. As we look at the global risk, in the world today, and you're insuring against that and the safety of those clients, it definitely seems like you would sort of be on the front lines of managing whatever comes up in that space.
One of the things about the accident health marketplace, not just Access Capital, is historically we have provided coverage for volunteer organizations, humanitarian organizations, first responders, media going into these hot zones, whether they be in the background or, quite frankly, historically providing coverage for embedded media over the years. So it is something that it's a little bit unique to A&H, but we take risks that most traditional insurance carriers will not take, right? And so the underwriters, in particular out of London, are pretty busy right now quoting on that type of business. The other thing that's really unique for A&H is where the market evolves somewhat to technology, but just evolving risks, and that is, esports, drone racing, and of late, covering civilian astronauts traveling to the space station. So,
Right.
As much as we put these aside, our traditional underwriters who might typically provide coverage and underwrite travel exposure, and next thing you know, you're providing coverage for someone traveling to the space station. So it's unique and different for A&H, and that's, I think, for me personally, that's what's been doing this for over 30 years, but that's what keeps it fresh and exciting is we play in the fringes. We are specialists, specialty underwriters that enjoy underwriting things that most folks won't.
As you look towards next year, what's your outlook for 2024?
Yeah, that's a great question. I think first is remaining agile and basically proactively addressing the changes in the marketplace, enhancing our existing specialty product offering and services, but just being in tune with the marketplace and being able, quite frankly, to pivot, right? As I alluded to previously, the market is changing. It's very dynamic. So we have to remain agile and pivot when needed. I think remaining and being resilient to the market, while at the same time increasing market penetration in our target markets, expanding our geographical footprint. So again, being that stable, resilient, specialty A&H carrier that people come to when they need to insure something that most carriers won't insure. And I think third, it's really leaning in on opportunities where we can create new strategic partnerships that where they're looking to service their customers, where we can provide coverage and services to not only an employer, but employee association groups, or as I alluded to before, space travelers or whatever the case might be. But, it's just, again, leaning in to the ever-changing marketplace and being that stable carrier, being that rock in the marketplace.
Well, Jay, it has been really fascinating digging into this market with you. You really are on sort of the ground level of a lot of what happens in safety and, first responders, as you mentioned, and all the folks that are really working on the edge for our society. So thank you. Thank you for spending the time with me and sharing your thoughts.
Thank you, Sandy. Really appreciate the time. Thank you.
That was Jay Hamilton, Global Head of Accident and Health at AXIS. For more Leaders Edge podcasts, go to leadersedge.com or subscribe at Spotify, SoundCloud, and Apple Podcasts.